Thank you very much. First of all, good afternoon, and let me thank each and everyone to join this call. As you all are aware that we started this year with a setback of COVID and the lockdown in month of April and a few parts of the nation in month of May as well, right? From June onwards, yes, the markets were open and the retail sector was doing good. And even in the current quarter, company has reported strong growth in the revenue on the back of good demand from both industrial as well as decorative segment in terms of both volume as well as value. In fact, we have grown in the decorative segment by 7%. If I talk about from last quarter, and contribution from decorative segment has increased by 7% compared to the same period last year, right? Festival season went well for the company, resulting into sales volume growth as well as value growth. 29% volume growth from the last quarter, and in terms of value, it is 40% quarter-on-quarter growth. In the coming quarters, looking at the raw material cycle, which is a little adverse as of now, definitely we'll take a call on the pricing trend and the marketing trend, how the company will take the decision basis the raw material prices. As on date, if I talk about last 6 months as well as last quarter results, though the volumes and the value growth the company has achieved, the company has recorded a sales turnover of 91 crore rupees with a raw material cost of 77%, which is significantly higher than the last year same quarter, which was 65% of my net revenue. This year it is 77% this quarter and 12% higher than the last year. If I compare to last quarter of the same year, it is more or less on the same lines, just 1% higher than the previous quarter. We close the year with, if I talk about H1, we close the year with a net loss of 36 crore rupees. And the quarter we have closed with a loss of 17 crore rupees. Considering the current trend, though the demand is coming back, we are achieving a top line month on month. In fact, we have done a good volume and value in Q2 and Q3 from demand perspective and volume perspective is very much looking positive side. At the same time, the raw material prices are a little bit challenged and on the reverse side as far as company is concerned. So we are expecting a slight relief in terms of passing of raw material increase to the trade. We have already passed in this month, and we will also consider this is the raw material prices. Over to Mr. Gupta.
Thank you, Mohit. Nice of you to have given a good introduction. So I think he has already briefed you about the details, and we are now open to question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Usmani, an individual investor. Please go ahead.
Hello. Hi, good afternoon.
Good afternoon.
Thank you for taking the question. Sir, in the last quarter, you had mentioned that our PBT will turn positive with the de-risking strategy. Where are we at with a strategy pertaining to the North and East India?
Okay. So, as you know, we have been trying to improve our margins as also improve the overall volumes. While we have been successful in improving the volumes, on the margin front, we have taken a significant beating. And the reason for taking this beating has been almost, I will say, abnormal increase in the commodity pricing. As you know, commodity prices have gone up significantly in last 1 year, and its impact on our sales, depending on our product mix, which is skewed heavily in favor of solvent-based product, has been to the tune of 30 to 40%. That being the case, the increase in input prices could not be passed on entirely to the consumers. So we have taken a hit, as Mohit mentioned to you. Our raw material prices or raw material contribution has gone up from around 65% of the net revenue to about 77%. A 12% hit we have taken. Because of that, we have not been able to turn cash positive till now.
Okay. Also, so you had mentioned an increase of 25% on revenue, and have you achieved that this quarter? Are we going to see the same trend in the upcoming quarters?
So our target was that we should be achieving a 25% growth year on year. We have not been able to do that much growth, but I think in Q2 our growth was close to some 20%.
40% in value and 29% in volume from previous quarter.
Okay, so our growth in volume term has been 29% in Q2. Going forward, well, we will try our best to see that the growth momentum is maintained. Let us see, because last year Q3 was still a good quarter. We will try to see that growth momentum is maintained. How much growth we will achieve, we'll come to know only in the month of January.
Okay. All right, sir.
That answers your question.
Thank you.
Thank you. The next question is from the line of Siddharth Shah, an individual investor. Please go ahead.
Good afternoon, sir. Thank you for taking my question. My first question is, how is the growth looking in the decorative and the industrial segment, and which one do you think has more growth prospects?
So, you have the data?
So, from year on year, decorative and industrial are more or less same. However, this year from the last quarter, we have grown in decorative segment by 7%.
Okay. And my second question would be, in the last quarter, you had mentioned that the decorative segment growth is coming from the west and the south, and the industrial is coming from the north and the east. So are we seeing any changes in these patterns, or is it something similar?
So I think the pattern remains similar. Our sales in west and south combined is increasing at a faster pace as compared to north and east, so far as decorative is concerned. So far as industrial is concerned, I think we will not be able to make such a differentiation, because in industrial we focus on particular segments and not on the zone wise, not on geographical base. But in decorative, what we mentioned to you, that south and west will see a higher growth than east and north, that has happened.
Yes. And my last question, so we have increased the number of machines from 500, as our target for the year was 1000 plus. And the largest peers are anywhere between 3000 and 5000. So what do you think of progress is that on, what's the progress on that?
So our tinting machine population in the country is perhaps
This is the operator. Sorry to interrupt. Management, we cannot hear you clearly. Hello? Ladies and gentlemen, please stay connected until we check the line of the management. Thank you. Ladies and gentlemen, thank you for patiently holding your line. The management line is back. Thank you, and over to you, sir.
Okay, so I was answering the question with regard to sales in South and West. Can all of you hear me, please? Can somebody say yes?
Yes, sir.
Okay. So our growth in South and West, as we had planned, is higher than the growth in East and North, and our strategy is working. So far as decorative paints are concerned, so far as industrial are concerned, we do not monitor it on the basis of geographical variation. We do monitor it on the basis of end use. So there, our overall industrial is improving, and we are now trying to diversify into new areas as well. Perhaps in next 3 to 6 months, we will try to see what new areas we can add. So as Mohit mentioned, our sales in decorative has increased faster. Am I right?
Yeah.
Okay. With that, does it answer your question?
Yes, yes. And just one last question.
Yeah.
So we have increased the number of machines to 500, but our target was 1,000 plus. And the largest peers are between 3,000 to 5,000. So what is the progress on that?
Okay, so the largest player actually is not 3,000 to 5,000, even more than that. So it's possible the largest player may even have 10,000 or 15,000. We are not able to increase beyond 500 because we do not have the funds. We have a shortage of working capital. And because of shortage of working capital, we are not able to purchase. So if you observe, I think it's almost 2-3 years that we are almost maintaining between 400, 500, 600 in that range only. So as soon as we get some funding from any source, we are trying to talk to 1 or 2 banks. If we get some funding, we will be able to buy machines and deploy them. Till then, we'll have to wait.
Okay, perfect. Thank you so much. Thank you.
Thank you. The next question is from the line of Karan Asli from Maximal Capital. Please go ahead.
Yeah, hi sir. Good evening, and thanks for the opportunity. 3 questions on my part. The first is, what will be the quantum of price increase that you have taken in the past quarter, and do you all expect to take any in the coming couple of quarters? Second is, could you comment on the commissioning of the Howrah plant and what is the expected offtake and utilization going forward? And the third is, could you give me any indication on the number of dealers, distributors that you all have added this quarter over last quarter, and what is the expected number going forward as well? Thank you.
Okay, I have not been able to get your third question, so anyway, I'll come to that later on. So first question which you are talking about is, what is the kind of price increase? So, the input cost has increased by almost 30-35%, more so for solvent-based products as compared to water-based products. I think we have been able to pass on only in the range of in the last quarter we were able to only pass on around 7 to 8% last quarter. This quarter again we have, this month of November again we have tried to pass on another 7-8%. We have yet to see the result whether it is be absorbed by the market or not. So I will say that till date we have announced around 15% price increase in our finished products, where again the raw material price increase has been on the order of around 40%. So the still gap is there. And going forward, let us see the reaction of the market on this increase which we have announced recently. If the market absorbs the increase, then we will try to further gauge the market and increase the prices as and when possible. The second question is regarding Havla plant. Havla plant, we have not yet started. We have not taken any steps. We have not taken any decision on that. And and the reason again is the fund availability. It will need investment, and since we are short of working capital at this moment, we do not want to diversify or divert our current working capital availability with us, which is already short, for fixed capex expenses. So again, capex will depend on availability of funds for long-term funds. As and when we get some funding, we will look at Havla plant possibility. And your third question was regarding the
number of dealers and distributors added in that.
Okay, so typically we do add around 200 to 250 dealers every month. So our active dealer base, which was hovering around 2,500, I think has already crossed 3,000 now. And it's a slow growth, but growth is continuously there in number of dealers who are active base who do take from us on a regular basis.
Yeah, also understood. And just a follow-up regarding the dealer addition. Is this spread across all geographies, or is it focused to any particular geography?
So we are, I should say, adding faster in West and South, but it is spread across all territories. We are adding everywhere, but because our gap is very high, our sales are very low in West and South, so maybe the addition of dealer is slightly higher there.
Sure, sir. That's very helpful. Thanks, and that's all from my end.
Thank you. The next question is from the line of Nitin Gandhi from KIFS Trade Capital. Please go ahead.
So can you share, thanks for taking my question. Can you share something on the finished goods, which is more or less quite a dead stock lying since long, and also share some stock on empty of stocks which you are holding, and how much you think you can realize over next 1 year?
Okay, so our finished good inventory on an average is about, how much is the finished good? 60-70 k?
Around 70 crores inventory.
Okay, so on an average we have a finished goods inventory of around 60 to 65 crores, and that continues to be so. We are not increasing finished good inventory per se, so whatever we produce normally gets sold. As regard the old inventory is concerned, I think we are carrying around 10 crores worth of old inventory, which is really old, and we are trying to either sell it off or dispose it off or reprocess it. And so perhaps we should be able to handle 70-75%, and balance 20-25% we'll have to dispose it off by way of auction or something. So we may have to take a small hit on that inventory because that has become quite old. Balance around 80-85% inventory is a regular fresh inventory which goes on getting produced and sold. And as I mentioned to you, whatever we are producing now is getting sold. It is only something which is more than 1.5 or 2 years old which is getting stuck up.
So above 1 year stock is only 10 crore.
It's about 10 to 12 crores only. It's not higher than that.
And more than a quarter?
See, paint normally has a life of 1 year to 3 years depending on the type of paint. So we do not monitor it on quarterly basis. Typically we look at paints which are more than 1 or more than 3 years. So, but I can say that more than a quarter inventory should not be also very high because most of the material we produce goes off immediately. So the area of concern remains only material which is more than 1 or more than 3 years old, which as I mentioned to you is only around maybe 11-12 crores.
And what are the requirements for fund for starting a new unit as well as from working capital perspective? So, or the approximate size which can put you to comparatively ease of operation?
So we are short of significant fund. As you know, more the funds available, the faster can be our operations. So, if we have a funding of even 75 to 100 crores, I think operation can become smooth. But if we want to have a real growth, we will need more funds. So currently we are on a lookout for some availability of fund around 70-75 crores. If we get that, our operation will become smooth, and we may try to kind of do some capex also with those funds.
75 crore includes Howrah operation, or for Howrah operation you will need additional money?
That will need additional funds then. This is only for current operations.
Okay. So for Howrah operation, to start project, how much you need, and how much working capital you will need for that also?
Both capex and working capital, our need for Howrah operation may be in the range of 25 to 40 crores.
Any plan for equity dilution?
At this moment, we do not have any plans, but we will see as and when any opportunity arrives or any such possibility is there, we will see. But currently, we do not have any plan for any such thing. We are talking to one or two banks for our loan, and we are hoping that one or two banks are looking at us. There some proposals are also being discussed. Perhaps some discussion will happen and something can come up.
But based on your numbers, balance sheet strength, I don't think anybody will be going beyond 60 crores.
It's possible. Actually, what we are saying is right. So how we are doing our strategy is, we are not looking at 75 crores at this moment. We are even looking at 15 crores, because that 15-20 crores that our operations are continued, our operation becomes smooth. And once the operation becomes smooth, once our top line and bottom line improves, we could be getting more funding from the existing banks. So the strategy is that in one go, instead of taking that much amount of money, we'll get small amount of money, maybe 20-25 crores. And once we get that funding from the banks, and as I mentioned to you, one or two banks are looking at it, they may not give us a direct funding, they may give us vendor financing or something like that. That is also good enough. But once we get that, we'll use that money to smoothen our operations, improve our balance sheet, go for more funding. So it will be a kind of iteration one by one.
So considering your past and all, it looks very baby step for you, 15-20 crore, and you are postponing the growth. I think it's a one moderate step. I will not say big step, but that's within your realm also, which you have done it in past. So I think if you can take that with little bold risk, I think things can move very fast and better for all.
So let us take this funding we can get from the bank first. Having taken it, having improved our operations, then I think we will look for other options. But our immediate our objective is that we should get some small funding, even 20-25 crores, which can smoothen the operations, improve the balance sheet, so that we can go further up.
Right, sir. All the best.
Thank you. The next question is from the line of Sonal Manas from Prescient Capital. Please go ahead.
Hi, sir. Am I audible?
Yeah.
So my question is just on a follow-up to the gentleman before me. I wanted to understand, you've been tracking the company for a while now. This funding constraint has been out there since the last 4-5 years, and just wanted to understand why is there a lack of interest to actually dilute the business, maybe raise money from the promoters right now at whatever valuation is possible, and maybe raise money from third parties at a later point in time. And I think it's more around why to actually choke growth for dilution. So that's the first one. I have a follow-up, but I will just wait for an answer to this one.
So what your suggestion is noted. We have been diluting it from time to time. As you know, we had gone for right issue in 2017-18, I think, and again 18-19.
Yes.
The whole idea was to get in some equity. Unfortunately, we made some cash losses in 1920 as well as in 2021, because of which whatever money we generated has been not been very useful for us. To some degree, we have been able to show some growth, but we have not been able to become profitable the way we wanted to be. Now, the challenge before us is both in terms of fund availability and also in terms of commodity prices. So to take care of fund availability, we are talking to banks, and we are in an advanced stage of discussion with the banks for funding. We are hoping we'll get some money which is required by us. Once we get this money, operation-wise, I think we'll be comfortable. Once we are good in balance sheet, then people may become interested in our equity as well. But at this moment, I don't think that our balance sheet is good enough for some kind of infusion.
Ladies and gentlemen, the line of the participant got disconnected. We'll move to the next question, which is from the line of Shivani Ahuja, an individual investor. Please go ahead.
Hello.
Hello.
Hi, sir. Thank you for taking my question. So, as mentioned by you in the previous quarter, we were foraying into sanitary ware and figuring how the market opportunity is. So, where are we at with the current segment, and what are we looking at in the future?
So that, as I mentioned to you last time, it was just an experiment. The experiment will continue for a year or so. We will let us see the results of it, and I think after a year we'll come back and to you and tell you what is happening. Currently, we do not see much of a traction in that, though we have been able to move some materials, but the growth has not been significant in that area. Again, you see, any new segment needs significant investment. As I mentioned, we have not been making any investment. So our focus currently is on paint business, our core business. Once we stabilize and we are able to pass the hump, we are able to cross the growth and the bottom line, we will start focusing on that, and by that time we will get the results from our experiment also. So I would say at this moment there has not been much of a development in that area. We will review it only at year end.
Thank you, sir. I have just one more follow-up question. Are we looking at any sort of advertising in a concentrated region, like suppose the East region or the West region?
I am really sorry to share with you that we have not done any advertisement per se for last perhaps 2 years, and again we are not planning to do any advertisement at this juncture, because we will be able to take up any advertisement or any such significant marketing activities only once we have sufficient funds available. So our first priority is to smoothen the operations. When the operations become smooth, we will look at additional activities, including marketing, including branding, including advertisement.
Okay, thank you so much, sir. Thank you.
Thank you. The next question is from the line of Sharmila Mistry, an individual investor. Please go ahead.
I can't hear anything, please.
Sharmila Mistry, please go ahead. Your line is unmuted.
Hello.
Yeah, hello.
Yeah, thank you, sir, for taking my question. Can you please throw some light on freight cost, which is extremely high? What is your outlook going forward in the next quarter or coming quarters?
Okay, freight cost. Okay, our freight cost has gone up. Has been actually not gone up, has been continuously going up along with the diesel prices. We are trying to kind of contain it to the extent possible. So I will only say that the increase in freight cost is there, but it is not as much as the increase in diesel prices are concerned. Of course, it depends on what kind of freight it is. It is across long distance, the increase is more, but across short distance, the increase is less. Also, we are trying to look at possibility of using electrical vehicles. There has been some success, not much. So on an average, freight costs have been going up. I think almost slightly lower than what has been the increase in the diesel prices, which is I think 20-25% in last 1 year. Yeah.
Okay. And sir, what about working capital cycle? How do you see that going forward?
Our working capital cycle is almost stationary. My colleague Mohit can give you the data, but I think we have not been increasing it. In fact, on the other hand, it is contained, and going forward, it will remain same, or there could be some improvement in that. Mohit, figures.
Yeah. So, Shamila, our data cycle or the collection is typically between 40 to 50 days, which is primarily high because of my industrial segment, and decorative segment because 70% is my decorative segment that pays me within 30 to 40 days. So effectively 45 to 50 days of my data cycle, and stock what I'm carrying as on date is if I talk about the good stock, that is 60 days, and yes, there are some exceptional stock which is in the age of 1 to 3 years. We are also holding it for 6 to 7 days. So practically my stock days are also close to 70 days. So those are the two things, and my payables, yes, because of the working capital issues, they have been delayed in payment of few debtors, and we are operating at almost 75 to 80 days of my payable side. That's my working capital as on date.
Okay, thank you, sir.
Thank you. The next question is from the line of Vedansh, an individual investor. Please go ahead.
Hi, sir. Thanks for taking my question. So I had two questions. So one is that I've been following this, and I'm invested in company for the last couple of years. So I think they've been mentioning that we don't do a lot of advertisements and all that, right? So that impacts the top line. But then, this I was reading about JSW Paints, and they came to market just like a year or so back, and they kind of gave 100 crore of turnover in a month, right? So they were able to quickly ramp up their top line. I don't know what strategy they did. So what are the gaps in terms of our strategy? Is it just like because you don't have capital that you're not able to do it, or is it like there's something else? Because it's not that Shalimar is not a known name. People know it. Still, if you're not able to ramp up our revenue, then I'm not sure whether it's a strategy issue or it's an advertisement issue or what is the issue. So if you can throw some light on that. And the second question was that on the cost of funding, right? I think cost for funding. I think in last couple of calls you did not really mention it as a major issue, but maybe at least in the call so far I've heard that it seems to be a major issue, coming out to be a major issue, right? So what is the problem here? As in, is the banks or something is happening that we're not able to raise the capital, or what exactly is causing that problem? I mean, is it like, has it gotten worse over a period of time that's why you are saying that that's not really something that is going to impact our revenue going forward? So maybe I was not clear on the funding bit a bit. So if you can throw some light on that as well, sir.
Okay, so we are talking about two things. One is JSW and one is the funding issue. So where JSW is concerned, they are present in many segments in which we are not present. For example, they are present in coil coatings, and they are present in different kind of paints where we are not there. Our segments are slightly different, but the commonality also, the commonality may be around 60-70%, but there are differences also. And since JSW, we are not aware of how much volume they are doing or what segment they are doing. But what you're saying is right. One of the important factors which has played in favor of our other paint manufacturers have been a significant induction of capital. So if you observe that JSW has invested more than I think 1,500 crore or something in the paint industry, both in terms of marketing expense as well as capex extent. Against that, our investment has been much low. Having said that, we have a different strategy. We are intending to take care of the working capital problems which have arisen primarily because of the commodity cycle. So if the commodities have not increased so much, you would have been at least cash positive, and if cash positive, then we would not have been suffering this cash crunch. Our cash losses have created a cash crunch. We hope to handle it by using the bank finance. And as you mentioned that we are mentioning it because last quarter, if you see our cash losses around 12-13 crores, which has created a big gap in our working. But going forward, once we handle it, then I think this problem will not be there, and we again will be growth path. So far as cost of funding is concerned, I think my colleague Mohit will be able to give you data on that.
So as on date, my consortium arrangement with the lead bank is SBI, having cost of debt is at around 12.85%, and my weighted average, if I talk about, is close to 12.5%, which is a significantly higher for our size of organization. Considering the rating, I'm still trying to get the best rate from the market, from the bank, so that I can put some saving in interest line item.
So I think just a follow up to that, sir. One is that is there a challenge in terms of raising the capital even for the day-to-day operation, or is it like if we have to maybe grow by a certain percentage, that growth capital is difficult to come by? So I mean, the question is like, are we able to kind of run our monthly, daily, or whatever expenses and everything that is happening, and is this a growth part of it, or is it the challenges on the day-to-day operations as well?
Yes, there is a challenge on the day-to-day operation, even though it's a limited challenge. But yes, we do have challenges on the daily operations, and we need that bank fund to handle day-to-day operations. Once that challenge is handled and we are back to our normal operations, then I think we will be able to raise funds for future growth. Growth per se will be achieved. Let us come back to our normal operations.
Not fair enough. So, what are the strategies, sir? I mean, I'm not really sure if you are saying that there is a problem in day-to-day. So, what are the things that we're doing that banks will give us the capital? Is it like we pay a higher interest, or are there other levers using which we can kind of get over this short-term? I'm assuming it's a short-term issue. So, how do we get over it?
So we are in discussion with 3 or 4 financial institutions for some kind of funding. What shape it will take, we will be able to come out only once something concrete happens. At this moment of time, we are only in the discussion stage. But because at least 2-3 people are showing interest, they are engaging, they are talking to us, I feel something will happen over a course of next 15-20 days. And as soon as any funding comes from any source, immediately we will inform the concerned people. We are hoping something will come because we are talking to 3-4 people, including I think 2 banks, 2 NBFCs, etc. Let us see, something will come up.
Just one request, if possible, can you, and once that happens, would it be possible to communicate it to exchanges so that the investors get an idea of that we are the portal?
Okay, let me check it about this regulation part of it. In case it is as per regulation, we don't have any problem in sharing with our investors. We will like to share everything important with our investors, and since this is the important thing, if the regulations are there, then we can look at it.
Sure. Thanks, sir, and best of luck. Hopefully, things this crisis goes away soon enough. And
so nice of you. I must thank you for your good wishes.
Thank you. Reminder to the participants, to ask a question, press star and 1. Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Ashok Kumar Gupta for closing comments.
So I must thank you all for coming and joining this conference. So we are passing through a difficult phase. In fact, we have been passing through a difficult phase for quite some time now. There were bright spots in between, and unfortunately things have gone beyond our control, and we are still having some issues. But let me assure you, management is trying its best to change the scenario and improve things. Hopefully in days to come, you will see a better organization. Thank you for your participation and faith in the company. Thank you.
Thank you. On behalf of Shalimar Paints Limited, that